Our next guest has helped shape innovative companies in the sector. He's the former CFO of Silver Wheaton and now the CEO and co-founder of Sandstorm Gold. Nolan Watson, thanks so much for being back on the show.
Well, thank you.
How have things been for you?
Things have been good.
Yeah.
Yeah, it's been a tough environment. It's been a tough few years for the entire industry, but that's provided us with a lot of opportunities to buy things, and we're glad we've enhanced our portfolio through the process.
So on that note, after taking a bit of a dip last month, Sandstorm Gold, or last year, Sandstorm Gold is up 14% so far this year. What is Sandstorm's strategy for 2016?
So 2015, in fact, I think you interviewed me about a year ago, and I said we're going to be buying a bunch of things, and we did. So we allocated over $200 million of capital in 2015 and the beginning of 2016. Took our portfolio up to over 130 streams and royalties. We've got significantly more cash flow profile, more growth. We did all the things that we said we were going to do at the time. And so for 2016, it's a bit of a different story now. So 2016 is be disciplined, pay down debt, monetize non-core assets, sell a few things that really aren't in our cash flow profile, that aren't that important to us, and get in a position where we're recharged and ready to go.
Well, Nolan, you've always stressed on the program how debt averse the company is, but how much debt would you be willing to take on? What are you comfortable with when you're eyeing new deals?
That's a great question. So there's this question about what portion of a capital structure of a company should be permanent in the form of debt. I believe the answer to that is zero. I believe the debt should be used for mining companies who can't control the price that they sell their commodity at. It should be used solely as a tool temporarily to make strategic acquisitions. So we borrowed a little bit of money to make some great acquisitions. Our goal is to pay it off immediately, get that debt down very quickly, and we don't plan on having debt as a permanent part of our capital structure.
It really seems that, you know, the streaming companies are getting so much respect in the industry. It's like you're on this kind of cloud of your own. But I want to ask you, a lot of people say, well, you know, it's just a new form of hedging. And I've asked David Hartquail this as well. What's your answer when people say that?
Well, it is absolutely a form of financing. So if you were doing debt financing as a mining company, you would likely take on a hedge at that time as part of that. The benefit of a stream is that we're able to finance companies and their assets into production, and we're able to do it in a way that is much more friendly, that doesn't have all of the negative covenants associated with regular forms of debt. So it's a lot more friendly, attractive form of capital compared to debt with a hedge.
What do you make of the current mining environment? If I asked you, compared to last year, is Nolan Watson more, optimistic in 2016 than he was in 2015?
So anytime you start a bear cycle, and we've certainly been going through one for the last 4 years in the gold business, you know that it's got to take a certain number of years to run its course. And when you're at the beginning of that cycle, it feels a little depressing, candidly, probably depressing for investors, retail investors, institutional investors, depressing for the companies, because they know it has a long course to run. Well, we've been through that for 4 years, and we're getting a lot closer to the end than we were to the beginning of that. And so I am a lot more optimistic. I know that eventually there's a turn coming. We're trying to position ourselves well for it so that we're going to have lots of assets where there'll be lots of exploration upside when the drills start going into the ground again. And so I'm a lot more excited today than I was a year or 2 years ago.
Do you watch the gold and silver prices closely?
Only every, half hour.
So pretty closely. Are you bullish on the metals?
I am. I think 2016, 2017 are going to be years of a lot of volatility. So I can't predict the price of gold within a year or two here, but I am very, very bullish 3 or 4 years out. I just think there's too much debt in the economy. There are too many issues that need to be worked out from a macro financial perspective. And you're starting to see huge amounts of inflow for the first time in a lot of years into gold. And that's, I think, the beginning of something that's going to be a longer term trend.
It's always a pleasure speaking with you. Nolan Watson of Sandstorm Gold, thanks so much for being with us.
Thank you.
Thanks for watching our coverage here from Gold Stock Analyst Investor Day. We'll have more for you, so stay tuned to Kitco.com. Thanks for watching. Thank you so much, Nolan.